Folks, I'm excited to tell you about my new sponsor, Black Bull Markets. They are based here in New Zealand, and they're a New Zealand regulated broker who offers up to 500 to 1 leverage and over 26,000 tradable instruments. You can trade Forex, shares, commodities, indices, crypto, and they're an award-winning brokerage firm here in Asia Pacific with dedicated 24/7 client support and no minimum deposit. To trade with Black Bull Markets today, click the link in the description below or in the card above.
What's going on, ladies and gentlemen? Hope you guys are doing well today. Happy weekend, happy Saturday, maybe Sunday for you all. Of course, we have a lot in store for you today. We have a lot of pairs to go over to prepare yourself for the week ahead. Have a lot of great setups that I'm going to be discussing. I'm going to be taking a lot of questions. We have a lot of updates as well. So very excited for this live stream. It is our first Saturday live stream back in over a month. Last week was a little busy, couldn't get on the morning, but today we are back and very excited. So, of course, drop your locations in the chat. Would love to see where you guys are from. I know we only have about 20 people in here right now. We're going to let people trickle on in, and then we're going to get started here in just a few more minutes. So beforehand, I'm going to go over some quick announcements. Just for any of you who are new to the channel, if any of you are new, welcome. Thank you for joining. We do appreciate it. We do hold live sessions every Wednesday at 8 a.m. Eastern time and then Saturday, 10 a.m. Eastern time. And this is on again, off again, month on, month off. So the month of March, we are on live streams. And then in April, we will be off of live streams and we will be pumping some nice educational YouTube content for you all to enjoy. So, of course, all of this is free. Would love to just hear your feedback and anything that you would suggest that you would like us to add, maybe take away, do better on. We're always looking to improve. So your feedback is definitely important to us. All right. South Africa, Belgium, Sri Lanka. Wow. Awesome. Good to have you on here. Nigeria, Jamaica, UK, South Carolina, Georgia, Jonesboro, Bangladesh. Good to have you guys on today. Atlanta. NZD CAD, we'll be discussing NZD CAD today for sure. Remember, these Saturday live streams are a little bit long. We do have a lot of pairs to go over. I'll try to keep each pair's explanations relatively short. I know sometimes I can go in depth on them for those of you who have been on for quite some time. So we're gonna try to limit it to maybe an hour and a half at most. If you guys have to hop off at any point in time, feel free to. No big deal. We will have this posted to the Trading Net YouTube channel shortly after the conclusion of this stream. So if you miss anything, you can always go back. Somalia, good to have you guys on today. We're going to get started here in maybe 3 or 4 minutes, but first and foremost, some announcements. So as you guys know, the release of our Smart Money Supply and Demand Crash Course is underway. For those of you who are already a part of our all-inclusive mentorship program and have not received that course, please feel free to reach out to me, and I'll be happy to provide that free of charge, of course. But it is available for purchase if anyone is interested. It's really a recap of our entire strategy in terms of its strict application, right? So it's not really for those who are beginners with smart money or supply and demand trading. It's really for intermediate to advanced level SMC traders. Because we really don't go over the terminology or the concepts or anything like that. It's strictly applying everything that we know in terms of our strategy, putting it together, going from a blank chart to a potential setup. So it is quite in depth, but if that is of interest to you, feel free to let me know. In addition, we have, for those of you who don't know, we have just come out with a new prop firm automation service. Very, very excited for it. And we are releasing a few more prop firms here to be working with to give you guys additional options into getting funded. So currently, we have a guarantee in passing your prop firm challenge or a full refund. We want you guys to be able to get funded without the hassle of going through so many different challenges and failing those challenges, spending hundreds to thousands of dollars on challenges, because it can add up over time. So we're relieving that stress, and we are guaranteeing you a funded account where you don't even pay a penny. A lot of other firms that do this, and there's not many, but some of them who do, they don't give money back for the challenge fee. We are taking on more liability ourselves and saying, hey, if we somehow fail the challenge, then we are not only giving back the service fee, but also the challenge fee as well. So we're currently utilizing Funding Pips and Nova Trading. Those are our two partners here. They're amazing prop firms. They have really great stories behind them. Yes, they are relatively new, but we've been developing relationships with them for quite some time. So I'm very, very confident in everything that they do in terms of the payouts and everything. Very credible firms. So definitely check that out. It's in our Discord community. I'll even just drop the Discord link here for you guys who are not a part of it. You guys can check it out. All information in terms of pricing, how it works, and timelines for literally everything in terms of when could you start and when you get your prop firm funded account information. It's really, really easy. I'll just drop my Discord in there for those of you who don't have it. And in addition, what we'll be doing to even further that service is provide trade ideas for your funded account. So not only are you going to be receiving a 100% guaranteed funded account where your money back, you're going to also be receiving trade ideas from the Ariel Fx team members to help you in your journey through financial freedom. So that is our goal for you, try to get you funded very easily and then provide you trade setups so that you guys can take advantage of that on your live funds to make money with that as well every single month. We're also offering our portfolio of EA package. So that is something that we unfortunately cannot use on these funded accounts at this time, but it is definitely available for you to take advantage of for more of a passive income stream approach. So definitely a part of that, one of those packages there. So I'll be going over this again at a later time throughout the end or close to the end of this live stream, but just wanted to give you guys a couple of announcements. And we are also working on, drum roll, well, maybe not drum roll, some bots specifically for the funded account so that not only can you get funded, but then keep your funding without having to do a single thing. And how easy and great would that be? So that's something we're working on right now. Has not come out yet, but hopefully within the near future. Anyways, keep dropping some comments here. Where are you guys from? Keep dropping them in. We'll start in 2 minutes at 10 after 10 because it is 10:08 for me. And then we'll get right into the charts. We have a lot to go over. So sit back, get a pen, paper, whatever you need. Get your coffee, tea, juice, whatever gets you going, and let's do this. Discord link doesn't work. Yeah, we're having problems with that lately. Let me try to find another one. I don't understand why that's the case. Sorry, guys. Let me just, I have to find it. Anyways, for those of you who have been on these live sessions before, what do you like about them the most? What do you not like about them? Would love to have your feedback, suggestions. We have Canada in the house. All right, we have 1 more minute and then we'll get started, guys, so don't worry. All right, let's try this link here. There we go. I'll try that one. If that doesn't work, just send me a message on Telegram at Ariel Fx Trading, and I'll just provide that for you. Portugal, Dominican Republic. Awesome. All right, good deal, guys. So you know how this works. We're going to be going over about half of the pairs first, and then we're going to be taking some questions just so I can communicate with you all. And then we're going to finish off with the rest. So definitely sit back. I cannot see the chat as I'm going through, unfortunately. So if you have a question, just write it down and ask it when I stop sharing my screen. And of course, sit back and relax and enjoy. So let's see. Let me just make sure. All right, can we see this screen? I'm going to go back in a second. Just type a yes in the chat if you can see this and hear me fine, if everything is clear. And then I'll get going just so I know, because I don't want to be talking to a wall here, you know? Okay, we're all good here. Okay, full screen, perfect. All right. So we're going to be going over everything that's in red. So if you guys have any additional questions outside of the ones not highlighted in red, So to just reach out to me at any point in time, we can maybe talk about it. I just don't want to spend the time to talk about things that are not highlighted, just because I just don't see anything interesting on them. I wouldn't be able to provide you guys with much value. It's not to say that nothing can't form throughout the week. It's just nothing that I currently see of interest. So, and remember, we only trade Forex, guys. I do not go over gold. No commodities, no indices, no stocks, no international stock, nothing. So it's just strictly Forex. All right, so within AUD JPY, what we want to do, and just this is what I implore you guys to consider when doing your top-down analysis. Keep it as simple as possible. We don't need to understand every little higher time frame and lower time frame candle down to its individual candlestick. We don't need to do that. We need to first understand direction. Where is the market likely to go for the week? Because what are we doing? We're not trading for the year. We're not trading for the month. We're not trading for the half a month. We're trading for the week ahead, or specifically really the day ahead. Okay, so the day to the week ahead, because what's coming up next? It's going to be the week of the 20th through the 25th, right? Or the 19th, yeah, the 20th through the 24th. That's the week we want to trade. So where is price likely to head in that week? Well, we are currently bearish. I don't care what's going on in here, right? It doesn't matter if we're overall bullish. We haven't come into an overall objective level yet. So currently we're making lower lows and lower highs. You know what you guys can do? You can go to the higher time frame, get a sheet of paper, and write down bullish or bearish on each pair. That way you know throughout the week, if you find a bullish setup on a pair that you had originally written bearish for, don't take it. That could even help with your trades, right? It's something I used to do a little while ago, but now I can, kind of just remember that. Not to say that you can't have any counter trend positions. Let's just say that these are areas in which we want to pull back and look for shorts. Well, if you find a beautiful counter trend that has obvious, liquidity runs at the right time of day, pullbacks, into areas of demand for buys up into that higher time frame objective, then that's something that we could look to do. But in terms of the overall direction, we don't want to be placing buys and then knowing that we're overall bearish, placing our take profits here, right? So we're doing a due diligence over the weekend, making sure we are fully prepared for the week ahead. All right, so with AUD/JPY, let's just go to the weekly really quick. Okay, we know that we are overall bearish here. We're making lower lows and lower highs. Okay, we have not taken the previous swing point. However, we have to note, even though that's the case, we have created a lot of sell side liquidity. Clear equal lows, clear sell to buy, and then the current trend is bullish. Okay, so the current trend is bullish. We have come into a level of demand here, right? So that sell to buy repricing, and then we continued. So that creates the demand at 62.50. So that's where we want to be looking to buy AJ, and that's exactly where it happened with that 2020 crash. Remember, COVID came out, huge crashes occurred. It's not random, guys. It's all pre-planned. Everything in this world is pre-planned, right? So we already knew that we had to come down and mitigate that demand prior to more longer-term institutional orders flowing for more buy-side direction, right? We needed that level. So COVID was used as the excuse to push price down into that level, okay? And why was that level valid? Well, we created equal lows and we swept that prior to creating that demand. So you may be asking, well, if we're bearish and then bullish, well, we're kind of wedging ourselves. Yeah, kind of. We're kind of consolidating on the higher time frame. We're not making higher highs, but we're also not making lower lows. So it's just a little tricky. So now what I look for is simply just the current direction of trend. We're making higher highs and higher lows here, but then on a lower time frame, we're making lower lows and lower highs. So if we're making higher highs and higher lows in the higher time frame, where is our previous demand? And that's right here. Right? That is the previous high that created this low, that created this overall higher high, that started this distribution, if that makes sense. Right? So this is the overall low, or these lows. This is one expansionary move. So this is the range of this movement. So when we get pullbacks, we want to be pulling back into our last selling volume. So either here or here, right? Either one of those two levels. And we can see that we haven't come into that level yet, those two levels. So we know that even if we are to continue long, like let's just say that, this area of supply here that we came up into is not going to hold, and we are going to continue just with this trend here. Well, we know that we probably need to come into these two levels first. So sells into that level, or not necessarily sells, but buys from this level is going to be, it could happen, meaning we could be looking for buys here. So any sells that we take prior to these two levels, We need to be looking to take profit at those levels, right? But we haven't come into that yet. And we know that we are counter trend bearish. So at that point in time, we can be looking for sells until we reach this level. Okay. Not to say that we're just going to buy it, but we have room to go to the downside. And if we look at the lower time frame, we clearly generated a lot of sell side liquidity in terms of this trend line. A lot of retail traders are probably buying at the third touch of this trend line here. So stops are going to go below either this low, or this low. So it's likely that we will go and at least take that low here, which we haven't done so yet. So further continuation short are what we expect. We can see, you know, the just really the overall trend, right? High, low, high, low, high. This is the overall low. This is the high. This is very important, guys. Since this is the high that generated this low, this is not a failure to make a lower low and a higher high in which we should look to break structure and just go long, right? We have to break this high, right? Because this is the high that generated that low. That's the high that needs to be broken prior to any sort of break of structure that could occur. So this was just all one overall retracement. So that's why it's so important to understand your higher and lower time frame structure so that you know that if you're trading lower time frame bullish here, right, you know that you need to stop trading it when you get into this level of supply because that's the high that created that low. We're likely to respect structure to the downside because we're still bearish. And that's exactly what happened. We respected and we continued short. If we just keep it simple, it's going to make our lives a lot easier. So we created descending liquidity. We had an overall buy to sell. Right? We had some noise in between, but we had that overall buy to sell. Now, where can we pull back? Let's just say price starts to retrace. Okay. Now we could easily, scale into a lower time frame. We understand that this is the low that generated, high that generated that low. So maybe, I don't know, we come up and do something like this, and we break the counter trend here. We create liquidity, come up into this level of supply, stop, fail to make the higher high, break counter trend structure this way, we pull back and we look to short. That's something that could happen, but I have no idea because it hasn't happened yet, right? But we have to kind of, and not necessarily anticipate, sort of anticipate, but just react off of what we see. So if we understand that this is something that could occur, if it does occur, we need to be able to react appropriately. But who knows, right? So we have to just go based upon what we do see right now. And what we do see is really just the higher time frame levels. So let's just scale out to the daily. If we get an overall retracement, remember, this is the high that generated this low. So if we get a pullback, this is really where we want to be pulling back into. So this is a nice level of supply. Why is that nice supply? Well, because first and foremost, we have imbalance in here between this wick and this wick. It's just straight selling volume. So we could pull back into that region where that daily 50 EMA is. And I'm actually coming out with a video on the daily 50 EMA. Or, well, just the 50 EMA in general, 4-hour 50, daily 50. It's an institutional indicator that the institutions actually use. So it's very useful and powerful tool. It's the only indicator I have on my chart. So you can see that this is a level of demand. We made a higher high. We made a higher low. We came into that demand. Could have made a higher high. In regards to structure, just from a pure structure standpoint, we should have made a higher high, obviously. Right? But we didn't, and that's expected because we came into that supply level. And instead we rolled over, so that demand flips to supply. So that would be a really good level of interest for us to be looking for pullbacks to short off from. So in and around that 91.3, 91.5. If we come up a little bit higher, which is could happen because this is still the range between that high and this low, we could come up into, just a very small level of supply right here. This is really that last buying volume within this trend that failed to generate the higher highs, just somewhere up in here. That's that last point of return. And we can see that we have relatively equal highs in here. So that's a possibility if we get a retracement, but at this current time, I really don't see anything lower time frame in here that would tell us, oh, screaming short, right? There's just nothing that's forming right now. So that's the whole point of these live sessions, guys, is to give you, overall directional bias so that you can go throughout your week, day to day, looking at lower time frame opportunities in the overall direction of that bias. Okay, this is not here to give you signals. This is not here to tell you what to do. This is here to just give you my opinion on what I think could possibly happen in the market. Not to say that it's going to, but what could happen, just based upon what I'm seeing on this Saturday morning. All right, so what we could actually see is, I don't know, this is a level of supply, but I'm not telling you to sell it here. What I'm just saying is, what if price opens on Sunday or Monday for some of you, creates perfectly equal highs and equal lows, sells to buy to sell, right? So that type 2 manipulation we talk about in that crash course right there. So we inject volatility to the downside, enticing sellers below this breakout of this support, come back up, take their stops, enticing them above the breakout of this resistance, mitigating supply, falling, breaking structure. That would be that 99% probable trade to take short into our level. So who knows if that's going to occur, but could it? Absolutely. And we just have to be prepared if something like that does happen. But we understand that that's our bias to begin with. All right, so that's how I normally start, guys. I normally start by going over one particular pair in depth. It's not going to be this long for every single one of these pairs, I promise. All right, moving forward. So we understand that AUD/JPY is bearish and that we can just easily correlate with AUD/USD. So overall, I mean, even in this current trend, we're bearish, but we have to zoom out because where could the higher time frame be? Well, the higher time frame is technically bullish. Why? Because this low came into a higher time frame level of repricing, of demand, right? So that's sell to buy, just like we had on AJ within the 2020 crash, huge sell, immediate reaction. Okay, this is a little bit of a learning lesson, a little bit of a tangent. I promise it won't take too long. When people, especially when they have their money tied up in their retirement savings or in the stock market and prices absolutely plummeting, right? 2008 crash, perfect example. I know a lot of people, well, really from my parents, a lot of my parents' friends, when the stock market was absolutely plummeting, everyone gets scared that it's going to keep going and they're going to lose all their money. And they pull out in cash. Just a word of advice, that's the worst thing you can do. We already know, just based upon regular trading of discount and premium, you want to buy low and sell high. So why, when the price of a stock, and I'm just giving an example here, if the price of a stock is plummeting, why are we looking to sell low? That's not the overall fundamentals of just general investing. We don't want to be selling low. So just having that core fundamental principle, that's the worst kind of mindset we should have. And then guess what happens? It reverts right back to the upside and we keep going. 2009 pretty much took care of the whole bearish market and we're back in the bullish market. That was back in 2008, 2009. So don't get so scared when price is creating volatility when I relate it to Forex. You know, if we're coming into a level of demand like we did on AJ, let's just say this was, well, then we know to look to buy it here and not be so scared of this crash because it just immediately reversed right back to the upside, just like what happened with the market after the housing crash. So that was our repricing event. That's where we kind of rebalanced ourselves in terms of these bank algorithms. I won't bore you with all that, but essentially that's what caused the continuation, and that was our last selling volume. So that we came into that level very nicely. And where was our prior supply in relation to that low? Right in here. So if we're going to go short, we need to go short off of this supply zone, right? Just to continue with the overall market direction. And we failed to do so here, really right in here and then right in here. So this would be our flip from supply to demand. So if we are to continue long, if this higher time frame demand is going to hold, this would be that level in which we want to be looking for buys. And in that case, we can be looking for buys from that level. Sometimes when I say higher time frame objective, and I sometimes say like, oh, it's not necessarily we're looking for buys. We just want to be having the understanding that we could, push into that particular level, right? Having that high probability. In this case, I'm going to be looking for buys just because of that level there. So what you could do, I mean, if you wanted to, that would be a nice trade. This would be a very long-term swing trade. Entry there, stop loss here. That's probably a good zone to do, right? But that's only for you who are willing to hold for months on end. If you're not, then we can just zoom into that level and wait to see what price does. But currently, we are still bearish, right? We can see this previous level of supply was mitigated with this push up, right? We created liquidity here. Type 2 manipulation, sell to buy to sell. Okay? Enticing sellers below this breakout of this wedge, I guess you could say, push right back up, mitigate that supply level, enticing buyers above the breakout of this trend line resistance. And then we can continue with the overall direction of the trend. So don't be so quick to judge a breakout. Don't be so quick to judge a break of structure. We have to just understand the overall direction of trend because it could have done this. It could have just done buy to sell. But instead, it did a sell to buy to sell. How do you know which one is going to work? Well, if you think that, oh, buy to sell, okay, great. But what about if you see a sell to buy? Then you're going to think, oh, pull back to long? Well, no, because we're in a bearish market, so we want to wait for, if it breaks in the current direction of trend, we want to wait for that re-break of the counter trend and then the continuation. So if that happens, we want to look for type 2. And if we just break to the upside first, then we just want to look for type 1, just buy to sell, pullback, continuation. So that's just a word of advice. So we're coming into 2 levels of supply here. This is just overall supply. Just like Aiden said on our live session on Wednesday, we don't believe this is the bottom in the market. For one, we haven't come into objective yet. But 2, this, if you just look at it from a common sense standpoint, usually when price creates an overall low, it doesn't just go like this. It doesn't just flatline like that. It will usually experience some form of Wyckoff accumulation, or sometimes it will experience some sort of, quick sell to buy, and then we can just continue from there. So I don't believe that this is a low. We didn't even fill the gap yet. This is where the gap is. This is not the gap, guys. That's not the gap. Even if we did fill it there, that's not the gap. This is the gap, right? That is the previous high that when we gapped up this past week, we started here. So this is where we need to come into at least. So that's an additional confluence. So right now we're just kind of in an overall pullback, right? We could, come further up into this supply. We could come further up in here. Really what I'm looking for, and there's really no setup at the moment, but if, I don't know, we get some sort of, buy to sell, maybe sweep liquidity of some kind, break counter trend structure, we could look to pull back to short off into our zone. So something like that. Overall bias is short. And do not be so enticed to short it, or long it if we break. Just because we haven't come down into objective, we haven't filled the gap yet, this could easily just be a buy to sell. So again, don't be so quick to judge breaks of structure. Right? Understand the higher time frame direction. That's AU. CAD, let me just see how many pairs. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. All right, so 11. So we'll do 11. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. All right, so we'll finish off with, we'll do all the way up into GCAD, and then we'll take some questions and then finish off with the rest. So with CAD-J, very similar to AJ, we are in a bearish market, right? Where's the previous supply zone? Well, you may think it's somewhere in here, right? But it's not. It's actually right in here. So this was a level in which we were looking at taking quite a long time ago, actually a month ago. Higher time frame. And we'll go over some of the other examples that we had on EJ, Chef J, and UJ that we're actually currently still in shorts with. So anyways, this is our prior supply level. We distributed, redistributed, I guess, but I won't go into the inner workings of that. We made a lower low. Really, this is not, you kind of got to pull back here. This is merely just building of liquidity prior to that overall retracement. So it's really just that 1, 2, looking for that 3 drive. So we created descending liquidity. We obviously have run that. We have distributed in price, and when we have fell, right? That's really how the market works. We're either trending, we're either consolidating, or we're either reaccumulating or redistributing. So we've come up into that higher time frame level. So just because, and this is a very important lesson that you can learn here, just because we've come up into it, right in here, you would have seen that initial reaction, right? Price is starting to push down. On a lower time frame, this is probably a clear lower time frame trend right there. You probably look to sell that. Why did price go like that? Because you have to look at the higher time frame when you're looking at breaks of structure, right? So let's just say, for instance, that we have a sell to buy, right, into a level of demand. You don't look, if this is the lower time frame trend right here, you don't look for this little break and then the pullback to go long. Why? Because price could easily come lower into it and just continue here and then finally go long. Where do you need to look for the break? The previous swing point. So how does that tie into this? Well, we can't just look at it from a lower time frame perspective and then just take it off supply in here and go short, just because we reacted off of the overall level. Why? Because it's a higher time frame level, so we need to break this low. Okay. So now, when price starts to continue up, now we can consider this high and this low to be a pullback. So we create a higher high. If we break below this low now, then we're good to go. We haven't done that. Right, we came into demand, then we failed to generate a higher high, came lower, consolidated, had that final push, and then we broke structure. Then we broke below this previous low. So now we know that we are bearish. Now we don't have to break below this level because we've already because this was just the previous low that made this high. So of course we needed to break this range. But now this is the low that made this high. So now all we have to do is break that range, right? So we created equal highs. We ran them buy to sell. We failed to make any sort of higher high, and we continued short. So 4-hour time frame. Where am I looking to take price? Well, we have two levels. We could either have an overall retracement back up into 99.5, essentially, or 99.45, or we can continue with the lower time frame trend. Here's another key piece of advice. If we make a lower low, right, this would be the high that generates this lower low. Just like any little tiny 5, 10, 15, 20-minute time frame trend, every single trend has its own structure, right? Has its own higher highs and higher lows. So just because we're looking at it from this time frame and we might see a break of structure here, does that mean we're supposed to go like that? No. Why? Because this is the structure on the higher time frame. It's the same thing. The markets are fractal. So if this is a high that generates this low in an overall bearish market, we want to be looking for that overall retracement. This would be a break of structure on a lower time frame, but it would just be an overall retracement on the higher time frame to continue short. Lower low, lower high, lower low. It's not that difficult. It just takes a little bit of patience and practice, right? That's why we can't just do analysis for 30 minutes on the weekend and that's it. We have to look at everything that's going on. So this is our overall higher time frame last point of supply. So if we get a push up, that would be that level in which I'm selling from. But at the same time, we're making on a lower time frame trend, lower lows and lower highs. So what if we just go like that? We could easily go like this and then finally have the overall retracement at a later time. So what I say is we can continue to trade with the trend until it breaks. Okay. So with that being said, we have a little tiny level of supply. We came up into it. We swept liquidity, right? This descending liquidity here. So we swept it, buy to sell, reprice, continue. That's that last buying volume. So what we could do is the same sort of thing. Maybe we even create a head and shoulders. Who knows? Head and shoulders fake out. We come back up, take the retail head and shoulders stop losses, come back up into that supply, and we fall, just filling some imbalance in here. Who knows? Overall, it's the trend. Right? That's what we're looking for. We're building confluence with smart money and institutional liquidity and time and price and supply and demand and all those concepts that we teach, and just putting it all together in the chart, just going with the overall direction of market structure. If there's nothing there, we don't trade it. And if there is, we take advantage of it, having the confidence that even if we do lose, our system is still long-term profitable. Okay. So that's that level in which I'm looking to trade. Again, same sort of deal could happen with CAD as it could with AJ, right? We create, descending liquidity of some kind. I don't know. We buy to sell into the supply level here, and then we pull back, break structure, and then we go short from that level. That could happen. Who knows? Hasn't happened yet, but it could. So that's my level, short term, 97.88, and then overall like 99.5. Chef J, same sort of deal. I won't go over the top down with this, but we're coming into our last point of return in terms of the counter trend. So if we are to continue long, this would be that point in which we do so. We swept a lot of sell side liquidity. We would want to see that sell to buy for the continuations. All right, so that's that last point. I'll just quickly go into the lower time frame so you can see what it looks like. Filling up a lot of imbalance. Right in here, you can't see it on the 15-minute. It's a clear level of demand. We made a higher high. We swept the low, sell to buy, reprice, continue. So that's the level in which we're trading in at this current time. So if we break and close below, then we're just going to continue lower, just like our other XXX JPY pairs. But we can see, just like all the other ones, CAD J, AJ, Chef J, we'll see on UJ and EJ in a little bit. We're making lower lows and lower highs. Yes, we are overall bullish, right? But the counter trend is still bearish. And we don't want to fight the higher time frame counter trend, right? Because if you're, and you know that when I say, oh, don't look to trade counter trend, only trade with the higher time frame. You can apply that to the higher time frame. However, where would you be looking to buy? You'd have to wait for a price to get in a discount, which could take months to years. So, you get what I'm saying though, right? We don't look to trade counter trend on the lower time frame because that's just a lot of noise. But on the higher time frame, if we're seeing clear trend, then we can definitely continue to trade. So just like AJ and all the other pairs, that clear buy to sell. It's in the counter trend repricing. So lower low, lower high, lower low, lower high. We swept all of this liquidity in here, right? That buy to sell into our last point of supply. We repriced. This counter trend failed because we never made a higher high. Instead, we made a lower low. So that's that level of supply. And just to make it very simple, this is the high that generated this low. This is all just lower time frame. This is just our overall pullback. So think about it like expansion, pullback, expansion. So that's what we're looking for. And that's exactly what happened in here. We distributed discrete higher highs, higher lows. Yeah, we broke structure in here, but that's lower time frame structure. Where do we need to break structure? In here, right? That's where we needed to break. But we didn't do that. We stopped and we made a higher high. Now we need to break that one. We stopped, made a higher high. Now we need to break this one. We stopped, made a higher high. We need to break this one. We stopped here, made a higher high. Now we broke. So now we can be looking for shorts. Having the understanding that, yeah, we're technically still counter trend bullish. I don't expect price to react and go long here. But if we do, I mean, we have this drawn up so we can just be prepared if we end up, breaking right back to the upside. We maybe could look to hedge our shorts with our buys. Who knows? We'll just see. But anyways, there's really nothing in here that tells me to look for shorts except for really this last buying volume. Really generally anywhere in this region of price. So 145, 145.5, 146, 146.5, just somewhere up into premium price, look for shorts, just like we are with AJ and CADJ. All right. What we can do, since we are seeing discrete higher highs and higher lows, looks like distribution within that level of supply, we can pull up our VFI. You see what that looks like. And clearly, it's diverging. Higher time frame. Price is rising. Volume is falling. So we are diverging between price and volume. And we know that that's a very potentially good sign of a reversal. And that's probably why we had this move like we did. So overall, looking for shorts. Euro AUD. All right, so with Euro AUD, let's just take a look. We are overall bullish, right? We've swept equal lows, sell to buy. We're continuing to do so. Equal lows in here, that low, swept it, sell to buy. We're continuing making higher highs and higher lows. We actually created a trend line. High here, a high in here, and a high in here. So we know we're going to go long. We got to take out this higher time frame buy side liquidity, but it's just a matter of when, right? So we need to be looking for buys. However, could we potentially look for shorts before we look for buys? Now I'll show you what I mean here. So we've come up into that level very nicely. So what we could see is not necessarily just an immediate run on that liquidity, but we could see a deeper retracement before continuing, right? More of just a higher time frame repricing. So really in here is what we need to be looking for. Well, I mean, I guess you could say here that's a little tiny level of demand. I'm actually not going to have that just because it might confuse you. I just don't think that would be an area of reaction. I think that maybe 1.5650 would be. This is really the last selling volume within this trend here. Low, high, failed, higher high. Just simple. This is the overall level of demand. So I think we can get down into discount before potentially pushing higher. So what we can see in here, I'll just maybe go to the 4 hour, it might look better. Type 2 manipulation. For those of you who have taken that course, you will know equal lows are really this trend line, and then equal highs. We buy, enticing buyers above the breakout. We come lower, take their stops, enticing traders below this breakout. And then we continue along with the overall direction. So that's that type 2, buy to sell to buy. So we actually came into a level of supply in here. We reacted like we did, we failed, and we made a higher high. So that is that flip from supply to demand. It really just, this entire region of price is that demand level. So anyways, we are bullish, right? But counter trend, we could be bearish, at least until probably 5,650, or maybe even this level, who knows? But we haven't even reached that to begin with. We've created equal lows here. So if we get a pullback, it is counter trend, so we have to be careful, right? Counter trend positions, you could take a quarter risk or maybe a half risk. So I'll just extend this over. So what we'll see is the high created a low, failed to make a higher high, and then we made a lower low. Where's that final repricing event? The last buying volume before the overall lower low is created. Well, really this entire region of that consolidation, really just that last buy to sell, just continuing with the trend. Low, high, low, high, low, right? That's what we're looking for, okay? So in regards to price, 1.60250 would probably be just in that general vicinity would be fine. Sweeping buy side liquidity and then continuing short. That's what we always want to see. We want to see prior to price coming into a level of interest, liquidity being built up. Why is that so important? It's important because in order to place large amounts of orders at that particular level, or just somewhere in here, right, wherever they're looking to sell, they have to have enough liquidity to do so, right? You can't just pull liquidity out from thin air, right? For every buyer, there has to be a seller. That's how a market is made, right? Going back in, ancient times when the barter system used to be prevalent, right? You can't just buy something without someone selling it to you. You can't sell to someone without someone buying from you. You can't just sell to thin air. No, who's buying it, right? So for every buyer, there's a seller, which means that if all of these sell positions are being placed, they need a lot of buy positions to be placed there as well. How do they do that? They generate liquidity, because if everyone is selling with this trend line, placing their stops above the high somewhere, they're essentially selling, right? They're placing their sell positions. If it hits their stop, to get out of the market, they have to do the opposite of what they did to get into it. Just like in science, right? For every reaction, there's an equal and opposite reaction or something like that. So if you're selling, you have to buy back your position from the market in order to get out of your position at a loss. So if you're buying back your position, you are essentially giving liquidity to someone who's selling. So that way they can go and sell. And that's why liquidity is built up prior to levels being met. It's a simple explanation. So if that doesn't make sense to you, that's okay. It could be, a little complicated for if you're relatively new, but that's essentially how the market works. It's all based upon volume and liquidity. It's not based upon bogus trend lines. It's not based upon wedge patterns or candlestick patterns or any of that nonsense garbage. It's based upon real orders, liquidity, volume, supply and demand, in my opinion. Well, really not my opinion. It's kind of factual. But anyways, same sort of deal with Euro NZD. Originally, I thought that since we are in an overall bullish market, we accumulated higher time frame. Our overall higher time frame objective is 1.77. It's just a higher time frame level of supply, right? So we're trending up into that level. So that's my overall objective. So we accumulated. We're making higher highs and higher lows. Pretty obvious, right? And then all of a sudden, we had a clear sell-off. Well, I don't get scared when this happens, just because this could be an easy sell to buy. And it was looking like that at the time. Crazy sell-off, an immediate reaction right back to the upside. I thought this could have been, a shoulder, a head, a shoulder, some sort of fake out sell to buy, right? And then continuation. Also, this was a break of these lows, right? All of these lows in here were taken with this move. So I thought easily we could just continue. However, we have stopped at a previous level of supply. So for those of you who took that short, congrats. That's great. I didn't, obviously, because I just didn't meet my rules in that sense. But we had the reaction from that supply level. So now what we can do is we can react off of what we're seeing here. So now that the market is telling us, okay, well, we've sold off, and this is most likely not a sell to buy anymore, because why didn't we just continue? Why didn't we move price in its overall direction? Right? If the market's going to sweep liquidity, it's going to and go in the correct direction, it's going to do it very quickly. And obviously we didn't do it. We continued to sell off. So the momentum of buyers is not there. So we created that supply. We mitigated that level beautifully. Now let's look at the counter trend. High, low, high, low, high, low, high, low. Failed to make a higher high, lower low. So that would be that level, very similar to Euro AUD that we're looking to sell with Euro NZD. Just this little repricing. And we have that 1 hour 50 EMA on our side. The 4 hour 50, I believe, is on our side as well. It's approaching that level. And we'll be talking about this in this YouTube video that I will be releasing this afternoon. So when we're taking the 50 EMA, essentially we want to be using it in conjunction with our overall bias. It should never be used alone. It's only used as a confluence. So we understand that this is a supply. So we're looking to sell from this anyways, regardless of where the 4 hour daily 50 EMA is. But the fact that this EMA is approaching, because remember, an EMA is exponential moving average. It's an average of price over X amount of candlesticks. If it's a 50 EMA, over the past 50 candles, it's the average of that price. So by the time, if this pulls back, this is going to continue to fall because the average is, we want to essentially converge, so mean reversion in a sense. Push back up into that level and then we fall. So that's a very good confluence to have. But you'll be learning about that in this YouTube video this afternoon. So let's see, Euro GBP, same sort of deal. I guess Euro is just quite frankly very, very weak right now. What I originally thought, and I had two options here. We came into a higher time frame level of supply. I'm not going to bore you with all that. We are overall bullish, right? We have a huge imbalance that we need to come into regardless. So I think that's where we're going to come into now. And that's where our take profits are set for our current shorts. But anyways, we were creating a head and shoulder. So I thought, okay, well, this could be a sell to buy into that level, right? So that's why selling from these levels are valid. But at the same time, we created a high, a low, a high, a low. This is still a higher low compared to this low. And then I thought we could pull back into, well, we created this ascending liquidity, sell to buy. I thought this could be a demand to look for buys. And we had the reaction. So I did hedge my shorts from my longs just in case the trend continued. But instead we rolled over. It's not a break of structure because we're higher time frame bullish, and understanding that liquidity needs to be run in terms of maybe this head and shoulders pattern. And then I'll be looking for buys from that level. So selling into that. So I lost on the buys. I'm winning on the sells. So I lost 1% on the buys, but I'm up, well, probably about 1% on this. About, I don't know why. Okay, that's right. I didn't sell it from there. Aiden sold it from there. And then here, up about 5.5. So that's just why it just doesn't matter to me if I lose hedge positions, because 5.5 plus like 1 or so, 6.5 minus the 1 I lost, I'm still net positive. But I wasn't too sure where price would go because it could continue long based upon the trend, but it also could continue short based upon the retail pattern that's forming, and we want to go against retail. And the fact that we came into a higher time frame supply, we could short into our higher time frame imbalance, and we had confluences for each trade. It wasn't just, oh, well, it could do this and it could do that. Well, let me just buy it at a random point and sell it at a random point. No, it's building confluence for every single trade. So anyways, 1 hour time frame. This is where Aiden sold it. I didn't, just because I wanted to buy it from here, and it just wasn't highly enough probable for me. I did short it from that level of supply. We continue to fall. So we are making lower lows, lower highs. So the overall direction, in my opinion, guys, is short until we at least hit 0.8660. So when we broke, when we failed to react from this repricing, that's that repricing event that when we took the liquidity, sell to buy, we repriced, we continued. That's the reaction. I bought it from there. Obviously, we lost, but we failed to make a higher high. We continued with the lower time frame structure. So I'm like, okay, we failed. We took out the low. Okay, now we can continue to look for shorts. All right, so we can scale in 15-minute time frame, and I had 2 levels. One was right here, and then one was right here. We had the reaction here. The stop is at, well, I put the stop right here at the secondary positions open, but now I'm moving the stop above the previous high. So not quite at break even, but close. So if we can continue short, great. If we have an overall retracement, our secondary position at 882840 is still valid in my opinion. Why? Because we haven't made a lower low yet, meaning this is still the range. So this could happen just like that. Simple. So that's why this is still valid here. Okay. So looking for shorts from that level here, and we're already in this position, so we can continue to hold. Euro JPY. So very similar to all the other yen pairs. You know, we are looking for continued shorts, right? We are still in positions here. This black horizontal line is just an additional position for shorts. This is something else. This right here, 143.86. I just didn't want to extend the line, was our entry point from this level here, from that repricing event. So I extend that over from the open of that buy to sell. That's where we sold it. So we got in right here, February 21st, and we've been in for about a month now. But that's okay. You know, it happens sometimes. You just have to be patient with it, because we can see this is the higher time frame trade. Low, high, low, high, low, high, low. We created descending liquidity. We bought to sell, right? Sweeping liquidity, reprice to continue. So overall, we're bearish. Just consider us overall bearish at this point. Higher time frame, yes, we still are higher time frame bullish. So what's interesting about this is within this current downtrend, the reason why I'm still looking for shorts in an overall uptrend is because we created equal lows here. We want to be taking out these equal lows, and I have a little tiny level of demand here that when we broke this counter trend to the upside, that was our last selling volume. So I want to push price into that 137 psychological level, potentially for longs, but more just to take profit on my shorts. So that's why, because we have that conviction to go short because of the sell side liquidity that's resting here. And also because, I mean, if you just take a look at this, what else could this be? Just take a look at this picture. You probably are now seeing it, right? Head and shoulder, shoulder, head, shoulder. Could be a fake out, sell to buy, go long. Something like that, who knows? But continuing short, that's what we expect. So we came up into that level, just further up into it, and then we decided to roll over. But in the process of rolling over, when we made lower lows and lower highs, we came up into each and every single solitary lower time frame level of supply. So we are mitigating it very beautifully. So to continue short, I have this inside supply here, right? Because we just busted right through it. We never had the reprice and short off. So that would be a level in which I look to short from. And then back up into here, 143.8, well, 144. Sorry, I think that black line is maybe confusing people. I'll get rid of this overall supply level. Yeah, 143.89, 143.9, something like that. Just deeper up into this imbalance to continue to look for shorting opportunities. However, since we are bullish, right, this was essentially, I guess you can call this one expansionary move. Really what I'm just looking for, or really what I'm looking at essentially is we swept this previous low to the right. And I'll go over that in a minute. But we came into this repricing event, this area of demand. We swept liquidity, sell to buy, reprice, continue, right? So that level of demand, I wasn't looking to buy it off that level by no means because we have equal lows. But the fact that we had a reaction, and what's interesting about this reaction is that we created equal highs and a previous low, relatively equal lows, I guess. We created lows here. We mitigated this level, but the most important thing that I saw was not just the mitigation here, but it's also the sell to buy, the reprice, and then the higher high to entice sellers below the low here, come back up and take their stops to continue with the overall direction of trend. So I am currently in buys from this level of demand here. If we roll over, oh well, I'm still in shorts from 143.86. Kind of a hedge. But I think that since we have created a high, a lower low, and then a higher high, we could be in for a counter trend, retracement, just an overall pullback. All right. So up into these sort of levels, 142.5, 143.9 is really where we're looking to sell from. But until then, since we have confluence, and this is what I mean, guys. Remember the first pair we talked about in AJ. I said that even though we have higher time frame levels, could we look to counter trend it? Yes, if we have room to go to the upside in this case, and we have the confluences there to actually buy it. Right? We're not just buying it because we think it's going to pull back into that level, because if you buy it and it just rolls over because we're in a downtrend, you'd be screwed, right? So just treat each trade like it's its own. Same thing here. We created equal highs, equal lows. We ran the resistance, so essentially enticing buyers 4 a.m. Eastern time on Friday. This is London session open. Enticing buyers, ran the stops. Enticing sellers, hopefully will run those stops and come up into that level. That's why I'm looking to buy it. That's why I have those confluences. So it's not just, because of the confluences here. It's also because of the mitigation of that demand. And then with the fact that we have room to go to the upside into our potential sell levels anyways. Because if we are to sell off, we need to do that from premium prices, which is up in here. All right, so that's EJ. Euro CAD. I really don't have much on Euro CAD. I'm not sure if I really want to talk about it too much. Really, the biggest thing is the fact that we generated equal highs. 1, 2, 3 highs here. We also have equal lows, so that's a good sign for continued shorts. But at the same time, we have this huge inverse head and shoulders. Shoulder, head, shoulder. Breakout into supply, we could roll over. However, we are still overall bullish. We're being capped by the daily 50 EMA. We still are bullish on this time frame, so I don't want to jump the gun here and just immediately start looking for sells. I would say that we are overall bearish, but who knows? This is the high that created this low. We could push deeper up into, premium before rolling over. I have no idea, right? The overall direction is still bullish at this time. But the fact that we came into a prior level of supply, this is really that repricing in terms of high, low, high, low, high, low, reprice that little green bullish candle there. That's where we came into and mitigated. So having that understanding that we mitigated that level and then on a lower time frame started to fall, right? We're creating lower lows and lower highs. There was a little repricing event here. So within this previous low that created this high, that created this low, this is the range. So there's a little repricing. So I took a small position here on Friday. If it hits my stop, it's oh well, whatever. But if we go short, then that would be great. Just because of the fact that we had all those other confluences that I just went over. In terms of a new trade, I'm not looking at anything new right now. I just wanted to show you guys what I thought could happen. If we roll over, great. It would be a nice trades to be looking to short. It would be really nice setups for those because we've come into a higher time frame level. But at the same time, we're still bullish, so we can just sit on our hands with this one for the time being. GBP AUD. So very similar to Euro AUD and Euro NZD that we looked at. We're bullish, right? We have, and you can see even in here, equal lows, sell to buy. We accumulated, we expanded. We're above the 4-hour 50. We're above the daily 50. We're probably above the weekly 50 almost. I don't really look at the weekly 50, but yeah, we are above the weekly 50. So essentially, price is being, or the EMA is capping price at dynamic support, meaning it's acting as the support in the market, right? So that we want to continue to look for buys. Now, if you just take a look at and zoom out here, let's look at the higher time frame structure. This is the high that generated this low. So now we're in this pullback phase. So we can probably come back up into premium, our last buying volume in here, just clearing up some imbalance that formed with this huge fall that happened in last year, actually, early last year. This huge fall. This is our last area of buying volume, essentially. We distributed, had that last failure to break the higher high or make a higher high. We extended to the downside, making a lower low. 1.88 psychological level. We could pull back up into that. It's just like having a regular lower low, lower high. Where do we want to pull back for a regular lower high? Just into some sort of supply, into premium price to continue short, right? It's the same principle on any time frame. So the fact that we are now bullish, we failed to make a lower low, we're making higher highs, especially just within this counter trend, right? This could be a potential lower low, lower high. If it's going to be a lower low, oh well, 1.88 is still on the cards, right? It's all on the table there. We're going to be continuing to look for buys until that level is met. But let's take a look at what's happening in here. 1, 2, 3, 4 touches essentially, just creating that support. Then we create this little wedge. We create a wedge. One touch to the bottom, to the top, to the bottom, top, bottom, top. Then we broke out. Enticing buyers. We roll lower. Enticing sellers. Taking the buyers' stop losses. Accumulating, going long. Finally, the institutions can accumulate their higher time frame orders and continue to push price in the overall direction. Now, this is the wave in which we don't want to, I would say don't want to miss because I don't want you guys to have FOMO, but this is the wave in which is going to continue up until 1.88 most likely. This is the wave to ride. So before any huge move can occur, we build liquidity or we entice certain traders to do certain things, right? So essentially that's what it was. This is a higher high. This is a higher low. This is a higher high. So just basic market structure. Now let's zoom into the concepts of our strategy, right? Equal lows are formed. If we're going long, we need to build liquidity in the opposite direction, right? Short term, we create a wedge. Retail breaks out, entices buyers, get them into the market. They got in the right direction, but at the wrong time. Price comes back down, buyers are out. Sellers are triggered. We accumulate, we go long, sellers are now out because their stops have been triggered. Everyone's out of the market, and now the correct direction can be assumed. So having that understanding, let's just say we get an overall pullback. Let's just talk about higher time frame first. Overall pullback 1.7550 would be that level. This is where we started the accumulation. This is where the imbalance is. So that could happen if we get an overall pullback, right? That doesn't mean that we're going to be bearish. If we break structure, this means that the overall direction is still bullish, and this would just be an overall pullback for continuations most likely. All right, but obviously that would take a couple weeks if that's going to occur, potentially even months, so who knows. Scaling into the 1 hour time frame. We had a beautiful opportunity here last week. For those of you who caught a 1 to 7 with us, it was very, very nice. You can see we're making higher highs, higher lows, higher high, higher low. And then right in here, we create equal lows, sell to buy into this demand, filling the imbalance at the right time of day, 9:45 or 9:30. This is New York open essentially. Sell to buy, we break the counter trend. Low, high, low, high, low, high. This is just a beautiful, typical Ariel Fx type of setup. Broke the counter trend, pull back. There's one level of repricing, and if you scale into a lower time frame, you had another one right there. 2 levels, 0.5% risk each. Boom, right back up to the upside to extend. You could even hold a runner to 1.88, but we just wanted 1.83. And this take profit was given prior to this actually, this move actually occurring. So yeah, we kind of had not only a wick entry, but a wick take profit as well. We got in and out at the right time. So this is really our expansionary move. If we have an overall pullback back down into these levels, we could look for continuations. Really, this is sort of that level of demand. So anywhere in here would be nice. So where could that be? Well, if we get an overall pullback, let's say we dig deeper. Well, essentially this, when we had the reactions from these 2 levels, we created imbalance in here, and then we created a little area of demand. So those are levels in which I'll look out for. I don't expect them to be hit, but if they are, then great, we can look to trade them. But the current direction is bearish. We have equal highs. What does that say? Buy side liquidity, overall, we're bullish. Okay. So making lower lows and lower highs. I am in this position at half risk because we can see on Thursday, we swept this liquidity, buy to sell, reprice, continue lower, high, low, failed, lower, low, into this level of supply. Had a little bit of drawdown stops above the high here. All right, we're sitting around break even. I want to see continuations lower with this overall pullback that we're seeing now into our higher time frame objective levels, at least into 1.8. That would be a good target, psychological level. All right. So at this current time, there's nothing but there. That's my bias. GBP CAD. I like GBP CAD a lot. I really, really do. Continuations long. Pound strength. Have we noticed a theme across the board? Euro GBP shorts, GBP CAD longs, GBP AUD longs. We'll potentially see some GBP USD longs in a minute. So pound strength is what we're looking for. Anyways, higher time frame. We have to do our due diligence on the higher time frame. Let's just say, for instance, we're just looking at the lower time frame. We're looking for longs. Where is our take profit? Where could we be looking to take profit? This is why higher time frame analysis is so important. So we understand that we have a level of supply because technically, yeah, we're bearish on a higher time frame. This is the high that generated this lower low. So we're just in a pullback phase at this current time. But have we reached a point where if the market, and I say the keyword if the market is going to roll over, I don't expect that to happen just because of I won't get into this, but because of the interest rates and what I think this could have been during this was too late after Brexit. This was the all-time low. No, it wasn't the all-time low. We had this huge sell to buy, but there was some sort of fundamental data that came out, and I just don't think that we're going to come below this low for a while. Anyways, that's for another day. But anyways, here we're going to continue to look to buy it until we at least reach a level in which potential shorts could come into play. So this is the high that generated that overall lower low. So let's look at the counter trend. We have a high, we have a low, we have a high. Equal highs were taken, buy to sell. You can see this is still that level of demand. That's a level of demand. We reacted from that level. You see that green candle right there? That was the reaction and that failure to make the higher high. Instead, we rolled over and made that lower low. So that's what we can see in terms of one expansionary move and the supply that needs to be reached prior to any sort of selling off that could occur. Not to say that we can't pull back now into our demand and then push up into there. That's a possibility. We're still bullish. But I think that before any significant move can occur, I think that at least 1.7. And look how that lines up. 1.7 into that area of supply, that psychological level is definitely imminent. So again, this is sort of just higher time frame reaccumulation. We have a level of demand here that we mitigated, and then you can see a level of supply here we came into, we failed, we continued higher. So that's that level of demand that we could see if we have a deeper pullback into that level to continue, right? Because low, high, low, and then we kind of here we failed, and then we made a higher high. So we could just start going like that. So overall, we're bullish. We're not only bullish higher time frame in terms of this move, but also lower time frame within these moves here. So at least into 1.7 is where I'm looking to buy it into. And I think that, this is definitely not a high in the market, guys. This high will be run. When you think about it, are we going to just plummet here and go short? What liquidity was run in terms of getting us into a huge bearish trend? If you just look at this logically, for those of you who have been in the market for a little while, you would just know that this is just not a high in the market. If the market's going to go short, we would likely have some sort of sweep and then continuation. So that just gives us more conviction. So at least up into this 1.6846 level, because what happens if price sweeps that and then has the overall pullback into 5.8 that we talked about before the continuation? That's a possibility. So that would be one of our take profits if we're looking to get into buys. So our higher time frame demand right in here, 1.6420 essentially. And then short term, if we continue with this lower time frame, we could easily do that. So why not trade with the current trend until it breaks, as long as there's confluences? So let's look at the 15-minute. What do we form here? Very simple. Shoulder, head, shoulder, sell to buy, reprice, continue. It's just simple. All day long, every day, twice on Sunday. Sweeping liquidity, we reprice, we continue long, we broke the counter trend. Low, high, low, high, low, higher high. You could look for a pullback into our level here. I'll go over that in a minute, but essentially the counter trend has been broken. We're continuing with the overall structure of the market on a higher time frame basis and a lower time frame basis as well. So when the higher and lower time frames are in alignment with each other, it gives us very good clarity and conviction for continuation. So I guess you could say this is a high, a low, a high. So we could come into here and into this demand for a higher low, for a higher high again. So I will be looking to buy from that level come next week. But if we get an overall retracement, having the understanding that this was the sell to buy that occurred, so technically this could be one expansion. We could have one pullback and one expansion just like that. Let's look at where we swept liquidity. I think it happened on the 5-minute. This is a nice level of unmitigated, well, first and foremost, imbalance in here. And two, that unmitigated level of demand right there. That formed at 9:30 Eastern Standard Time. That's when the bell was going off for New York, the stock exchange. So these two levels are very good for longs. 1.6583, 1.6658, something like that. Right. Overall bias is long until we at least reach 6.850 and then ultimately 1.7. All right. Okay, so I'm going to stop sharing. I'm going to go over some questions if you guys have any. Let's see. Waiting for Monday fake move then trade. Yeah, Monday can be false moves in the market. I would say Monday is not really the best day to trade. I would usually wait to trade Tuesday for the rest of the week. Usually you want to see the markets kind of settle in to see where the current direction of the trend is. We have about 50 minutes left on the stream, so I may have time to go over the rest. So guys, these live streams, just to clarify, these live streams are not meant to, again, be signals of any kind. This is not meant to teach you my strategy. This is here to have you already have an understanding of smart money and supply and demand, coming on and getting information as to what I'm looking for the week. If it is at all hard to interpret, that is why we have course material. All right. So I can't just sit here and just teach you guys how liquidity works and the inner workings of supply and demand and all that stuff. That's just not the point of these lives. So if you're looking for education, get that education first. All right, then these live streams would be more helpful. Okay, so just in my advice, it doesn't even have to be from me, but from someone else, I would definitely advise you to get some education. Just watch some YouTube videos. I have content on YouTube for free all the time. I post on my personal YouTube and Trading Nut's YouTube, so you're more than welcome to do that as well. But these live streams are not meant to be. It's meant to be for learning, but at the same time, I'm not here to go over basic concepts. It would just be a waste of time. Price of the SMC crash course. The price is $349 for the crash course. Why skip EU? There's not something on every pair, guys. I don't want to just sit there and just twiddle my thumbs and not give you guys value. I've already done analysis on all the pairs. I don't see anything on EU. There's no point in going over it. I already said that at the beginning of the live anyways. GU, yeah, I believe GU is one of the pairs I have. Let me go check. Yeah, I'm going to go through the rest. I have 11 more to go. I'm going to go through the rest relatively quickly. Okay, I'm just going to give you guys a general direction, tell you guys what's going on. But yeah. Do I trade engulfing candlesticks? No, I do not. But engulfing candlesticks are retail based, guys. What is an engulfing candlestick? Like that's the question you have to ask. And where is it being formed? What time of day are they being formed? What time frame are you looking on? You know, all this stuff matters. It's not just engulfing candlesticks. Let me just buy or sell it. That's just retail. And that's why retail loses. It's important to have an understanding of the holistic perspective, guys. If you are at all confused, please, I would recommend before you guys even hop on these live streams, go just watch the YouTube videos. If you can't afford mentorship, YouTube videos are a great way to get some information, you know, learn the strategy in sort of a surface level way, and just get some value there. So 1 hour engulfing, again, this is what I mean, guys. This is why education is so important. What is time frame? Time frame is so subjective. Price is being delivered just one way. Okay, we're going to share screen here. So why not trade this thing? This is an engulfing candlestick. That's an engulfing candlestick. That's an engulfing candlestick. This is an engulfing candle. It's like you can't use these just by themselves. It doesn't make a lick of sense, right? Especially because if you're looking at the 1 hour, well, if you're looking to sell right here, or let's just say you're looking to sell right here upon that engulfing candlestick. I'm going to keep that marking drawn. Now let me go to the 2 hour time frame, okay? Or maybe the 3 hour to show it's different. Okay, well, why not sell here? So what's the difference between looking at the 1 hour and the 3 hour? It's the exact same price delivery. You're just looking at a different perspective of the market. Time frame is just perspective. It's just a zoomed in or zoomed out version of the exact same thing, right? So we cannot look at price from one time frame. When people say, oh, the hourly engulfings are a lot better than 15-minute engulfings, it just shows kind of ignorance. And it's just, I would recommend, guys, please go check out my YouTube videos. Easy way to learn. These live streams are going to be a little more in depth. Course material, get mentorship. Don't cheap out on mentorship either, or you're just going to get cheap results. It doesn't even have to be through me, guys. I find something that resonates with you. If you resonate with the way that I break down charts, then I'd love to speak with you on a call. You can just go book a call. I'm on my website, arielfxtrading.com. I'd love to speak with you about how we can help you. But I really do think that education would do you guys well before more advanced material. Did you do any on GU? No, I'm about to on GU. Yeah, I will be talking about GU in a second. How much time can it take to master? I mean, this depends. Some people it takes a year, 2 years, 3, 4, 5 years. I've been doing it for 6 years. It took me 18 months of failure to become consistent. Think about it, guys. Have you ever learned a musical instrument before or learned a sport? How many years does it take to practice in order to get good at it, right? It's just a skill, right? And the problem is people look for the easiest and cheapest way out of things. Oh, what can I get for $50 that could make me a millionaire overnight? I mean, come on, let's just be real. Like, it's not going to happen. Right? Instant gratification is what kills people. That is why 99% of people around the world are living paycheck to paycheck or broke. It's because of that mindset that they have. I would really recommend, if you guys can really practice the mindset and trait of patience, right? You're going to be doing a lot better in your trading. Understanding that you're not going to make money in your first year or two. You're really not. But that's the only way to build the skill. It's not going to come overnight. It's not going to come in a month or a week or anything. That's why when people, try to learn a strategy through a course and they fail at it for a week or so, they think it doesn't work. No, it's just the trader doesn't know how to make it work because they don't have the experience. Right? So that's why people hop around from group to group all the time. So you have to stick with it. Took me a year and a half. Imagine a year and a half of failure, but imagine 4 years of university that teaches you how to become a part of the system. Doesn't teach you anything about investing or mindset or anything like that. So yeah, it's going to take time. I'm not going to sugarcoat anything. All right, so we have GU, question about GU. Let's see what else. So you think for USD JPY? Yep. Jean, I'll be going over USD JPY. AD CAD, yep. By all means, guys, I will do that for sure. I have that as a part of the list. All right, let's see what else we have. And you guys who know me, who've been on these streams for a while, again, I don't sugarcoat anything. I'm very straight up with you guys. It may sound kind of rude in a sense, but it's really for your own good, though. But guys, I'm not going to not help you with anything that you guys need. If you guys have questions, I'll be more than happy to help because I do want you guys to learn. And if you're not learning through these streams, then maybe we can take other avenues like potential mentorship or course material or even just YouTube videos, for free. That's stuff that we have on the Trading Net YouTube channel. You can watch them on my personal YouTube channel. It's all there. I post a lot. Coming out with another one this afternoon. Guys, I do not do anything besides Forex. Please do not ask me about Bitcoin. All right, we're going to go over the rest of the pairs, and then we will be done for the day. So GBP NZD, very similar to GBP CAD, GBP AUD, all that good stuff. We're looking for overall buys, right? So our previous structure, higher high, higher low, higher high. So this is one expansionary move. So could we have one overall pullback? Sure, we could, right? Because this is one expansionary move. This is one pullback. This is not a break of structure. It's just a liquidity run for continuations. So GBP NZD is bullish. So our areas of interest will be 2 levels. Well, really 3, because we have 1, 2, and 3. But why those levels? Well, if we continue with just this structure, that is something that we could see, just a lower time frame trend continuing. If we have an overall retracement, we know that this is the low that generated this high. So where could the overall retracement come into? Our last selling volume, right? And here we have imbalance in there as well. But in the short term, we have these 2 levels of repricing, one in here, one in here, those 2 levels of demand, higher high, higher low, higher high. Okay. So what is expected after a higher high, a higher low? So these are the levels in which we want to be looking to trade from. What creates a repricing? What creates a demand level? Well, it's essentially, your counter trend. To make it simplistic as possible, look at your counter trend. This low made this high. Did that high make a low? Yes. Did this high make a low? Yes. Did this high make a low? No, it did not. This becomes your demand because we failed to generate a lower low and we created a higher high. And in the process, we actually repriced us a tad bit right in there. So I guess this was your overall pullback. We failed, and then we made a higher high again. So those 2 levels are where I'm looking to trade from. I already said that when I got into this trade, when price was up in here, I went break even. I'm break even on this. I'm out of this position. However, I'm still interested in a half risk position from this level that we have not yet been triggered in. If we get it, great. Stops are below this low. Perfect. This is not a high in the market. These highs will be run within the overall structure. If we come lower, then I will be looking to trade from around 193 to 192.8, somewhere in and around those levels. Okay. Those are my levels for GN, GBP USD. What's interesting about GU is that we have relatively equal highs here. These are relatively equal highs. So what does that tell us? That tells us there's buy side liquidity. So we need to continue to run higher, right? We're in a bullish market, even though we're bearish, right? Don't be so quick to say, oh, we're in a bearish market, we need to be looking for shorts. Well, first and foremost, we came into all-time lows on GU at 1.0520. We made all-time lows. So when we start the uptrend, we're probably going to have a deeper retracement at least, potentially even a full-on structure shift. So that's why it's so important. If you guys didn't understand that we actually did come into higher time frame equal lows and you were trading GU, that's kind of concerning. You need to understand everything about the pair that you're looking to trade. Every single trade that you place is essentially a small investment. And why do we make investments if we don't understand the investment? Right? It's as simple as that. This is not a game, guys. This is not a game for fun. This is a game with real money. And we need to treat it as a business or a career. We have to, as a profession. So if we get an overall retracement into our, this is just a level of reprice. I'm not going to really go into this. 1.16, I'll talk about that at a later time within the upcoming weeks. We're not anywhere near that level yet. But most importantly, we created equal highs. We have 1.25, that psychological level. I do think that we will go and run that at some point. 4-hour 50 EMA, we are above. Daily 50 EMA, we are above. 1 hour 50 EMA, I don't really look at the 1 hour 50 EMA. It's really just, for lower time frame trading, yes, 1 hour 50 EMA is good, but for higher time frame levels, 4-hour and daily 50 for trend and everything like that. So anyways, 4-hour time frame, we created this wedge. 1, 2, 3, 4 touches here. 1, 2, 3, 4 touches there. And then this prior low. Okay, so what happened? Well, we create the wedge, and guess what? Oh, boom, sell, enticing sellers, take the stops of anyone who's buying, so liquidity, essentially. Enticing sellers below the breakout of this wedge. Oh, it's an engulfing. Right back to the upside. Stops are taken, right? So entice sellers, push higher in the overall direction of trend, and we can continue. That's what we're looking for, at least into 1.25. So now that we have that, we can scale in, and now we can see higher high, higher low, potentially a higher high. So we're just following structure. If we get an overall retracement, fine. I'm not going to be looking to essentially buy here because these aren't really clear levels of demand, but I will be looking for more of, I don't know what's going to happen, like just counter trend breaks, just a failure to make a lower low, some sort of reaction in this level, counter trend breaks to the upside, pulling back to continue. That's essentially what I would look for if we come deeper into here. But we haven't done that yet. Having the understanding that we faked out, sell to buy, we broke the counter trend, we're making higher highs, higher lows, we're overall bullish, we have a higher time frame objective at 1.25. The chances of us coming lower than this low is quite slim. Let's go down to the 15-minute. Equal lows were formed. Whoops. Equal lows were formed. We broke those equal lows, sweeping liquidity, overall retracement. We actually ended up taking this previous low. We filled the gap, and then we started the uptrend. What's interesting about what's going on here? Equal highs, equal lows, enticing buyers coming down, taking their stops, enticing sellers running their stops again. Type 2 manipulation. 1, 2, 3. Buy to sell to buy. What time did this occur? 3:30 in the morning, Eastern Standard Time. London session open. What time did the stops were triggered and the sell stops in here? The sell orders were triggered here. What time? 6:30, 7. That's about London, New York session overlap. And then why did we stop at that exact price? We pull 50% of the fib, essentially. Well, 50% of the imbalance is around that level. I guess you could pull it right there. 7.6. 50% of the imbalance we came into very nicely. Sell to buy. And let's look at the lower time frame. And this is how you can do top down. Right? This is exactly how you can do top down. We swept some sort of sell side liquidity, filling the gap, taking higher time frame sell side liquidity here, enticing buyers, enticing sellers, continuations. Where's the counter trend? Low, high, low, high, low. That's our last lowest point before the structure break. So that repricing right in here is that area of interest for me. We just missed it. So unfortunately, we missed by a few pips. It's unfortunate. That would have been a phenomenal trade, but we continue. If this is going to be the low that created this high, who's to say, just like in here, it's an overall retracement for continuations. Who says we can't have an overall pullback for continuations like that? Sure, we could. We could take sell side liquidity in here and then come into that level. So I'm going to keep that open for a little while. And that could be a higher time frame trade that we see. Right? Just imagine, right? Stops are below that low there. Take profit is at our higher time frame. Well, this is overall take profit. This is not just take profit one. Take profit one's going to be dependent upon if we pull back. Let's say we pull back here. That's our take profit one. right? That's just simple rules that we have. But that's a 1 to 14. You pass your funding prop firm challenge in one trade, essentially. Anyways, that's GU. UCAD. I don't know. We don't have a lot of time left. I don't know if I want to go into UCAD too much. I'll just give you guys a general. We're overall bullish right now. In my opinion, we're still pushing higher. Honestly, I don't want to confuse you here with UCAD. It's just going to be too much. NCHEF. Okay, with NCHEF we can talk about. NZD Swiss franc. We can see that we are higher time frame bearish, right? We're making lower lows, lower highs. Essentially, this is the low that generated this high. We came into a level of supply right here. That last buying volume, we shorted off, made a lower low. Could we pull back up into here? Potentially. We could have that overall retracement. If that's the case, we look to short from these levels. Right, for continuations into 0.53, which is our higher time frame objective. Right. So with that being said, you know, that is definitely our higher time frame levels that we could look to short off, but still lower time frame is still bearish, right? Low, high, low. This is supply. This is our overall retracement into supply, and we could look for a lower low now. So let's just briefly go over what's going on in here to make this a supply level. Well, first and foremost, we swept 1, 2, 3 touches of this descending trend line, had that buy to sell into a previous area of supply here. Just consolidation. On a lower time frame, see right in here. So we swept that liquidity, 1, 2, 3 touches. Boom, we mitigated that level, and we failed to make made a higher high, and we made a lower low. Even though we are still bullish within this trend line here, or not trend line, but just trend. High, low, high, low. So essentially, this is the last buying volume here that failed to generate a higher high within this structure, and we made the lower low. So that is really that supply level. But on the lower time frame, there's a lower time frame level of supply here. Equal highs were run, buy to sell. Just further confluence and conviction, right? So let's scale back out, 4-hour time frame. So that occurred. We failed to made a higher high. We're in a bearish downtrend. So of course we made a lower low. We had an overall retracement. We created equal highs right in here. And the same way in which we sweep liquidity, we build liquidity, ascending liquidity here, buy to sell. And then this wick came into, if I just like, here, I'll just go like this. Right, that wick came into where we swept liquidity here. This, remember that 1-hour buy to sell that swept equal highs that came into that lower time frame level of supply? That lower time frame level of supply was a part of this supply within the buy to sell that swept this liquidity and came into that supply level. I know it's a lot of information, guys, but it makes sense, doesn't it? You put together the pieces of the puzzle. You have to put together what is going on everywhere. You don't have to understand every little candle, but just generally the structure, generally where liquidity is run, where did the liquidity run come into to the left, you know, just stuff like that. But anyways, we swept liquidity to the upside, buy to sell. However, we're still bullish. High, low, high, low, high, low. So could we have made a higher high? Yeah, we could have. So sells from the sponsored candle or sponsored move would not have been appropriate because we're still bullish. But the fact that we stopped there and actually had the reaction, and instead of making a higher high, made a lower low, you would see this as 1 drive, 2 drive. We're looking for that 3rd drive into the low, potentially even a 4th drive because we have a higher time frame level at 5.3. And just to, I guess maybe to quickly show you where that is. Essentially this previous low, the overall low on NZD Swiss franc. We're below the daily 50. We're just tapping into that daily 50 now. It's a good confluence for our entry points. Again, I'm going to be creating that YouTube video today. That'll be released. But anyways, we failed. We made a lower low. So let's look at structure. So this is the high that generated this lower low. We had a sell limit at 5885, right? This is the demand that price came into that failed to make a higher high that made a lower low that mitigated this little tiny level of supply. So that turns from demand to supply. And then we had imbalance here that we never filled. We never retested that as, I guess, resistance essentially. So price created descending liquidity. We ran it, enticing buyers, buy to sell. It's just everything is against retail. Do you guys see how I'm breaking down charts? I go against retail every which way. So why are people still trading retail? Don't know. I don't get it. Anyways, lower low, lower high, lower low. That's exactly why we have that entry point to the T. 5885 price, we made a lower low from this previous swing low. So stops are a break even, partials have been taken. So anyways, we can see this huge buy to sell. So we're just going to continue to trade with the trend. We have two levels here. We have this little, just this little level right there. It's within the buy to sell, so it made sense. It's in premium price. And we had our lower time frame last buying volume. So if we come up into that level, then we are looking for short. So we are in a little bit of profit on NZD Swiss franc here. And we will look to continue to roll over and look for shorts. So those are my levels, NZD Swiss franc. Continuing here, GJ. Ooh, okay, let's see, 11:30. So I have a little less than 30 minutes. Daily time frame. So we are overall bullish. We're making higher highs and higher lows. This is a clear liquidity run that swept these equal lows, right? We're just in a clear uptrend. So we could easily continue higher, maybe into 180 overall within the next couple of months to the next year or so, right? Huge sell to buy. But what's important about what is going on in here? If this is a higher high, where is the higher low? It's not here. Why not? Because this is a retail wedge. Why would this be the low of a retail wedge? Why would we just start? Because if we broke out, made a higher high and just continued, that would be following the retail sort of break out of the wedge pattern, pullback and continuation. Retail doesn't work, remember. Retail is because retail is easy. It's easy to see. It's easy to see wedge patterns, easy to pull trend lines. What's easy is going to screw you, I promise. So wedge pattern was built, counter trend were bearish, lower lows and lower highs. So we could come down into our overall level of demand, see overall pullback because we're bullish, sell to buy, pullback continuation. That's what we could see. So this is not the low, in my opinion. And knowing that, you would know that this is not a low just because it's a retail wedge pattern. But 155 is where we could come into 154.5, maybe 154, just somewhere deeper into. If you scale into this, there's a lower time frame, equal low, sell to buy, and there's like a demand here that was never mitigated. Lower time frame stuff, but regardless, this is where we swept liquidity, sell to buy, repricing continuation, right? So just in this general level. So we could push down lower into that level, kind of take out anyone who is buying here, the stop losses that are placed below these lows, which is why retail is going to get screwed here when we push down further. And you can see the overall theme, right? GJ shorts, CAD shorts, EJ shorts, UJ shorts, Chef J short. We're all looking to short off. We came into that repricing just like we had on all those other yen pairs, right? Lower low, or not a lower low, excuse me. Just a low. We haven't broken the counter trend to the downside yet. We're still bullish here. We finally did it right there. But anyways, low, high, lower low. So where in this pullback fails to create a higher high? High, low, that low created that new higher high. Low, demand, failed, lower low. That creates that supply, that last buying volume, and you can just clearly see it with the huge imbalance. So we finally came back up into that level. So essentially, what is it? Just in general terms, structure, low, high, looking for what? A lower low. I mean, plain as day. So we fake out of this wedge. Now we can look to take retail stops short because they're breaking out. They're the breakout traders. You could even probably extend this trend line. That's probably what they're doing. And that's exactly why we had this reaction where we did. It's just building confluences for retail and then going against what they're doing, right? Observe the masses and do the opposite, right? 1, 2, 3, 4 touches, 1, 2, 3, 4 touches. Doesn't matter how many touches, it's building up of liquidity. We break out, enticing buyers. Now we're going to come short most likely and take out their stops and even entice sellers maybe below this breakout of this trend line. And that's where we could potentially go long from this level. I'm not going to buy it here, but we could be looking for longs at that point. So let's go back. So what did we see? We've come up into that higher time frame level. This is very important. Okay? This is why I hedged my position. So we have retail head and shoulders. That's just clear as day, right? Shoulder, head, shoulder. It's funny how people are, looking to short below a neckline, even though they got the direction right. We've come up into a higher time frame level, so we could easily short off. They're just most likely going to lose before they win. So that's where we just have to be patient. Now you could have placed a half risk position here, and it's not a bad idea too. If you have just a general area, that is the level, higher time frame level, right? So you could place a half risk position here. If it just ends up just blowing right through it, well, you only lose half risk or 0.5%. But let's just say it does go like this. Let's just say there's no confirmation, meaning there's no counter trend that can clearly be broken for a clear pullback and a clear entry. That would be perfect confirmation. But let's just say you don't get that. Well, then at least you know you're in the trade at half risk, you're making money, and you don't have to have FOMO, right? But let's just say you do get confirmation. Well, then you can place the rest of your risk at that point and have a better risk to reward. But it's all about psychology. You got to win in the mind first, protect your mind, and then you go to the charts, essentially. So we fake out lower, and we push higher. So I'm looking at this from two sides. I'm looking at it from, okay, we're still bullish here in this trend. Could this just be a liquidity run? Because it was. I mean, we swept it. It was also the enticement of retail shorts below the neckline. But the fact that we had a clear reaction from that level, I thought, okay, we may look to pull back into a level of demand and go long to continue with the overall market direction. On having the understanding that we came into that higher time frame supply and we faked out short from this retail head and shoulders. I knew that was the case, but I wanted to hedge myself anyways. So what I did was I noticed that we had equal highs and equal lows. So of course, when retail is, break and retest, they look at it from, oh, I'm making money. Nope, stop loss hit. Oh, darn, stop loss is hit. Then price comes lower in their right directions. Now they get back into the market. They break out of the neckline. Nope, right back to the upside, potentially hit their stops there. So I'm looking at this from a structure standpoint, sell to buy for potential continuation. So I had a hedge position at this level. I did. But I also shorted it from in here and in here. I thought that, okay, well, high, low, failed, lower, low. This could be that supply in which we roll short with, because what we did do is we faked out, we broke the support, enticing sellers, came back up, took their stops, enticing buyers above the resistance, came back down, took their stops. That type 2 manipulation we talked about. And why did we stop in here? Well, this was the reprice. We came into that level, we repriced, and we continued lower. So it was a lower time frame supply level there. I didn't sell it from that level, but I just looked back afterwards and saw that it was there. So I was like, okay, cool. That's another confluence. Anyways, 30-minute time frame, or maybe it was 15-minute. So I sold it from those two levels. You can see that this is the first risk to reward here. The second one is high, low, failed, lower, low. There's a lower time frame supply in there. It's probably not seen. I think it's seen on the 10-minute, but for the sake of time, I won't go into it. Then we have imbalance in there as well. So stops are above this high. Obviously, we did not get triggered. That's a bad line right there. We did not get triggered. And that was this level right here. This is for about a 1 to 9. This is for about a 1 to 3.5. So we have another level in which we're looking to short. So now that we had that reaction, we made a lower low. Now I know that we're probably going to continue short, right? We lost on the buys, and while we're winning on the sells, but still the aggregate total of profit loss is net profit, right? Because I can lose on hedge position, that's fine, but overall with a 1 to 9, because I'm in probably 3-4% here, or well, maybe 3%, and then like maybe 1% in this trade, still in net positive. But understanding we've come into the higher time frame level, and all these lower time frames and liquidity is being taken care of, and now we're just following the lower time frame structure. So just like all the other yen pairs, we could come back up into imbalance, or really just this last buying volume, just somewhere up into here, maybe sweep Friday's high, right? Sweep Friday's high Monday, and then just continue lower or something like that. So that's something that you could wait on for a continuation short. But the overall direction, in my opinion, at least until 155 or 154.5, is bearish. UJ, same sort of deal, right? We still are in this trade here. This risk reward is not with this supply. You can see, because I just didn't want to have two rectangles in the same level. This was our original level. And for those of you in VIP, we talked about this. Just because it doesn't hit the same day as we talked about it doesn't mean it's not valid, right? Well, we got triggered in the end of February. We're still holding this. We're in profit. If you guys are not in this position, if you did get into this position and somehow got out of it because we just weren't getting in profit immediately, that's something you need to focus on, is patience, right? It's very important. Stops are above the previous swing high, right in here. This is the high that generated this low. We did not get triggered, luckily. But that's, it makes sense because this is our supply level before this overall lower low was created. All of this was just intermediate liquidity to be run, enticing buyers maybe above a trend line or something, and then continuing lower in the overall direction of trend. So that was that supply. So when we came into that supply level, now I can just get rid of this. We tapped into a lower time frame imbalance in here. But anyways, we distributed. Demand was met right there. Demand was met right here. Demand was met right there. We failed to make a higher high. Every single time we made a higher high. Failed, lower low. Equal highs, that's a beautiful area to be looking for pullbacks, sweeping buy side liquidity, freeing liquidity up, mitigating that supply, going short overall direction of trend. So that is where I'm going to be looking to sell. We've been talking about this for the past week. 135.81. So that's my overall bias on UJ. But again, remember, who knows? Could we, for instance, come up into this level, buy to sell, sweep liquidity in here, break counter trend, pull back and short potentially? That would be a setup, and it would just be within this current trend here. And then maybe eventually it pulls back. Then we have the overall retracement, lower low, lower high, lower low. See, that's how the market can work. And we just have to have an understanding of the structure. All right. So I'm not saying to sell it there. I'm just saying if it reacts and we break structure to the downside, we can continue to trade with the lower time frame trend until it breaks. Meaning it breaks and then we again sell from that level because we're overall bearish. And it wouldn't be a break of structure to the upside. All right. Let's see. NJ, I'm not going to go over NJ. I don't know why I have that. AUD, NZD, I don't know why I have that either. NCAD, ACAD, and eChef. I'm going to go over eChef, then I'm going to do the two CAD pairs, and then we'll be done. So, and for those of you who are still on, I appreciate your time. I know you'd probably rather be doing anything else on the weekend than listening to my voice, but I do appreciate you hopping on with me. Anyways, Euro Chef, we're in a downtrend, right? We're making lower lows, lower highs. That's pretty easy, self-explanatory. Not to say we can't come higher into imbalance. I just wanted to get back up into premium, at least retest this overall level of supply. I mean, it's huge supply, but at least getting back up into here, right? We did. And when we started to fall, we were respecting each and every lower time frame level of supply. So that's a good sign, right? So, lower low, lower high, lower low, lower high, lower low. We want to be looking for a lower high. On the daily time frame, we came up into our first level of interest, which, if we can see it, this is demand. We pulled back into demand, had a reaction, and we failed making a lower low. So that was our first level. Secondary levels up here, I'll talk about in a second. But really, this high created this low. This is the range. So we're going to be pulling back up into that range to continue to short wherever that may be with the overall trend direction. So on Friday, we can clearly see that we had equal highs created. Let's go to the 1 hour. 1, 2, 3 touches essentially prior to our first level. Our secondary level is really just a level of just getting back up into premium even further, because having one entry here and the stop loss here is really not the best risk to reward. I have entry here, stop loss at the secondary entry, which that stop loss can be at the high. That's kind of how I split it up. So this is sort of our last buying volume, within the lower time frame structure. It's not a clear level of supply by any means, but it's there just in case we do run higher. So equal highs were run. We're in a little bit of profit now. Nothing to really say about it. My overall bias is short, so I'm going to continue to look for shorts until proven otherwise. So if we get, a clear, push to the downside, break of counter trend, then that equal high buy to sell, we could be in for a nice retracement for shorts. Who knows? I don't know if that's going to happen, but currently in shorts at this time. So overall, we're bearish. All right, 2 more, and then we are done. Okay, AUD CAD. So on AUD CAD, we are bullish and bearish. What I mean by this is that we're making lower lows and lower highs. However, we're making higher highs and higher lows. Higher highs and higher. We're respecting each and every level of demand, but we're also respecting each and every level of supply. So it's almost like sort of wedging ourselves in a way. So quickly, and I talk about this within the course. I do a full breakdown in AUD CAD, but essentially we see 1, 2, 3, 4, 5 touches of this ascending trend line. We sell off. 2008 crash, used as the excuse to take liquidity. before continuing in the upside direction. Again, everything's pre-planned. Supply, reaction, failed to make a lower low, higher high. This becomes that repricing event. That becomes that flip from supply to demand. If you guys don't think supply to demand flips are important, they are a lot. They really are. We created equal lows in the meantime. So we finally came down, mitigated that demand, and swept that liquidity. Again, same sort of thing. When we swept liquidity coming into that repricing, we created another repricing event. Sell to buy, reprice, continue. That's that level of demand that we now want to come and mitigate. And that's exactly what happens here. Boom. And on a lower time frame, we accumulate. I'm not going to go into all this. I don't want to do a full top down. For those of you who have taken the course, then you'll see this entire breakdown. I think it's about an hour long. I go over everything with it. But accumulation, previous supply, we come back up into, we failed to make a lower low as expected. There's lower time frame stuff in here as well, but then we broke out. So essentially anywhere in between here is where that higher time frame level, if price is going to go long, then we should go long from that level. And we haven't come into it yet. So now we know that further shorts are expected, not just because we have equal lows. That's a whole other story. But we have equal lows. So that's just further conviction that we're going to sell off. But we have that objective before potentially going long. We do need to come into that level, in my opinion. So what could this also be forming? Shoulder, head, I don't know, potential shoulder. This is an area that just we'll talk about when I go to lower time frame. That could be a fake out of the head and shoulders into our objective, and then we go like that to go with the higher time frame bullish structure. However, we're still bearish in a sense that we swept equal highs here. You see this huge buy to sell. We reprice, we continue lower. Same thing here. Sweep liquidity, buy to sell, and we create more liquidity, buy to sell. This is probably a mitigation of this supply. Just like this liquidity run above that high was a mitigation of this supply that mitigated the buy to sell here. So overall, we're still pushing lower. Within the course, I go over every single point, but I'm not going to discuss it here. Take way too much time. So anyways, we swept liquidity to the upside. We're now starting to fall. So now the higher time frame in terms of bullish structure, we need to come into here, right? The lower time frame structure is bearish. So that just tells us if we're going to go long, we need to come down into here. We haven't done that yet. So there's still room to go to the downside, meaning further shorts are expected. But also we swept buy side liquidity and now we're starting to fall. The lower time frame trend is still bearish here. So that tells us we should be looking to sell. Every which way, we need to be looking for areas to sell. So we are in currently two positions. We are in one. There's just a level of supply here and then a lower time frame level of supply here. It's one right there and then one right there. So two positions in really good profit. We're aiming for a 1 to 19 and then a 1 to 6 on those. Stops are break even, partials have been taken. So it's a little confusing just because I would probably say that even though we mitigated here, we have a lower time frame level of supply here that I originally wanted. I really still want that because we still could pull back up into that level and maintain bearish structure. We could just be sweeping all this liquidity, right? And then continuation into that level. So I would probably classify just this overall level of supply here, that failure to generate the higher high, because we swept liquidity. Remember we talked about that level into that supply. So where's the counter trend? High, low, high, low, high, low, failed, lower, low. So yeah, we mitigated it once, but remember that's okay because we can sweep liquidity, mitigate it a second time and go short. It's just the overall retracement. Lower, low, lower, high, lower, low. That could be the case here. So looking for shorts from, we'll call it 94. That's that repricing event there. It's also a psychological level. But in the meantime, if we get a retracement, I can see this as equal high. So I do think we'll run a little bit higher. But in terms of the prior structure, I would say low, high. I mean, really, this is one extension. Low, probably high here, and then low here. So this would be the overall retracement. We have a little bit of a repricing event. And this is, I don't want to confuse you guys, but really what I'm trying to say is there's an unmitigated level of supply here at 92.63 that I think we could come into. So maybe that could be the region in which price mitigates in terms of the buy to sell. So building liquidity prior to a level, and then we come into that buy to sell, something like that. So I have two levels. And even if you wanted to just place these at half risk each or something like that, you could do that. So place your entry here. Stop loss would go essentially at our secondary entry. And this is still a 1 to 3, so it meets my risk to reward rules. So it's fine by me. If it's not fine by you, then you'll have to adjust or just not place it in general. So that's something you could do. And in terms of, okay, we're likely to run those equal highs before running lower. So that would be that first entry. And if we come higher, then at least if we get stopped out, then we immediately get triggered into our second position to where that stop is above the previous high here, that repricing high. So that pretty much says that if we get into this position, the only way that we lose money is if price actually stops here and then creates a higher high, which is just not probable. So in that way, building probability says it doesn't matter if we win one of them or we lose this one and we win this one, then okay, that's a 1 to 5 minus 1%, or if you're doing 0.5%, it's still the same proportion. You're still going to be a net profit, right? Equal lows we still have to take. Overall demand in which we haven't mitigated yet, imbalance we need to fill. Just building probability behind your trade. So those two levels are where I'm looking to get in. 92632 and then a 94. Same thing with NZD CAD. We are in a little bit of drawdown right now. So you could be looking to hedge potentially, because let's just say we do end up continuing long because we are bullish. This is a huge bullish run. Yeah, we swept the previous high. We did by a fraction of a couple pips, right? But we still are bullish. So we could run higher potentially. But we made a low, we failed to make a higher high, and then we made a lower low. So that tells me, and just basing it with confluence with AUD CAD, further downside as expected, that this would be a 1 drive, 2 drive, at least 3rd drive. This is just an overall pullback type of phase, right? That's what I'm expecting. I didn't expect price to stop here at supply because we're bullish. Higher high, higher low. What do you expect? Higher high, most likely. But the fact that we stopped, made a lower low, now we can be looking for pullbacks into our prior supply level. So where is our supply? Look at the counter trend. High, low, high, low. Well, really, this is a low, but this is demand. We came into that demand, failed to make the higher high, lower low. So I had two levels, 8, 5, 6, 40. We had an initial reaction here, but couldn't move stop to break even or take partials because we haven't cleared a previous swing low yet. So we're still in drawdown here. Both positions, stop losses are above the high. And now we just got triggered into our last point of return here, this repricing on a lower time frame. So if we just break through it and continue, well, then we'll just have to reevaluate and potentially look for buys, but that will be at a later time. So we still are currently, I don't know if I have the risk to reward tool, probably not, but stops are above that previous repricing's high. So failed to make the higher high here, lower low. And the process, just like AUD CAD and like NZD Swiss franc and all that stuff, we swept liquidity, buy to sell. That's what we're looking for. Right, so just like we had here, NZD Swiss franc, swept liquidity, buy to sell into supply. So with NZD CAD, swept liquidity, buy to sell into supply. So 8608 is my entry. What we could see is pullbacks into our level of demand. So that could be a hedge, right? Higher high, higher low, higher high, low, high. We could hedge. If we do go short, then great. We're in profit on both of our sells. We lose on the buys, no worries. Overall profit would probably still net us some money, right? But if we do stop and we continue, then we lose on the sells and then we win on the buys, and most likely with the risk to reward that we'll have, it would still be net profit. Now, hedging can be detrimental in a sense if you don't know how to do it correctly. What if, for instance, we come up higher, sweep the stops, then come lower, and then sweep the stops of the buys? Could happen, but you have to treat each trade as its own. So, and use good risk management. So at the end of the day, even if you do lose both, it's still just like losing two regular trades because you're building confluence for both trades, if that makes sense. So, all right, guys, that's what I have. Thank you guys so much for tuning in. I know that was a long session. I really appreciate your time. Thank you for all your questions. Please, if you do have any questions about anything else, feel free to message me. I'd be happy to answer anything. I'll stay on for the next couple of minutes until noon, and then I'm heading out for the weekend. Again, talking about platform automation, again, really quick. If you are looking to get funded, guaranteed, we will provide you literally with a funded account or your full refund money back if that's something you're interested in. We also provide trade ideas, just like the ones we're talking about here, in a sense, on your funded account as well. So helping you to not only get funded, but to maintain and grow your funded account is so important. Other firms that do something similar to this, they don't assume any liability, meaning they'll give you back your service fee. They won't give you back the challenge fee because that's just more liability for them. They also won't have the liability of providing you guys with trade ideas, right? So it takes all the liability off them. They're essentially in it just to make money off of you. And that's not what we're about at all. That's why we don't upsell a single thing. Anyone who has a part of our or has a membership within our all-inclusive mentorship service, you guys are getting every single course we create in the future for free, or we don't upsell anything. That's not what we're about here. And at the same time, we want to provide a solution to a major problem in this industry where people are spending thousands and thousands of dollars and trying to get funded in the first place, but failing challenges. And then even if they get to that funded account, most of those people don't even get to their first payout. So not only can we guarantee you a funded account, but also provide professional trade ideas on our end and help you grow that funded account. As long as you can just practice risk management, you guys are going to be fine. All righty. So if you guys are interested in that, that's within the Discord. I posted that link above. So scroll up within the chat. It's there. And it shows pretty much everything. I'll even just show you what it looks like really quick. Right in here, all you got to do is find the channel like it says get funded. You guys can read all about it. Announcements, we post announcements, client results, people can see, even everyone who has passed their individual accounts, screen recordings of that, certificates left and right, FAQs if you want to read more about you may have questions, I'm sure. Here's some FAQs. Start here. This is exactly what you can do if you want to get started on anything that we have here in terms of each individual prop firm. Make sure you read the rules on the funded accounts for these prop firms, right? Because each prop firm has different sets of rules. In my opinion, Nova Trading is a little bit better because the only rule that it has on its funded account is you can't hold trades over the weekend, which that's something that we can easily get around. Funding pips is a little bit different. It has more strict rules. However, if that's something that you would be interested in terms of forcing you to be disciplined, then that would be better for you as well. In that case, funding pips is a little more cheaper than Nova, but in my opinion, Nova is a little bit better in terms of having relaxed rules. Both of them allow EAs on the funded account. The only thing is we can't use our personal EAs on the funded account just based upon the rules that are set forth within that funded account. Our EAs wouldn't really work. But if you have other EAs that you want to use, you're more than welcome to. But what we are doing is we are coming out with EAs specifically for the funded account, but I don't have a timeline for that. We just started that process. It could take upwards of 6 or so months before that is completed. So don't expect that anytime soon, but that is something that we will be adding over time. And then obviously within each, so for funding pips, Nova, you get your signal service, we'll call it, whatever, trade idea service for your funded account. You'll get added to those groups if you do go with at least that gold package. But that's something I just wanted to share in case any of you would be interested. Obviously, if you don't think it's for you, you don't have to. Just providing opportunity for those who would, kind of fancy that. Oh, let's see. Yeah, again, guys, I can't really answer some of these questions. A lot of them are very, very broad and very, very basic. And it's something that I would recommend you guys getting a little more education on first before hopping on these live sessions. Start with YouTube, start with mentorship, get some education first. This is really to help people who are already familiarized with smart money and supply and demand, just learn more about what we're looking at, preparing you guys for the upcoming trading week, providing you with overall directional bias, and even some areas of interest as well. So this is not meant to be a course. I'm not here to teach you per se. I'm here to give you education, but really in the form of helping you with your bias for your personal trades throughout the week. For those of you who already have education, who have been practicing for a while, who understand and are just looking to practice and gain that experience. All right, so let's see. Any other questions, guys? Anything else? Be happy to answer. Again, thank you for 2 hours of your time. I know you'd probably rather be doing anything else on your Saturday. So thank you very much. I'll stay on for another minute. But again, yep, that's Smart Money Concept Supply and Demand Crash Course is available for purchase on our website, arielfxtrading.com. For those of you who are already in our all-inclusive mentorship program, meaning you have our VIP and you already have all of our courses and you don't have that new course we just came out with, let me know and I'll provide that for you for free. Let's see what else we have here. Yep, you guys can go rewatch the recording. I know it's long, but it's going to be up as soon as I end the broadcast here. But again, I will never neglect a question, even if it's a relatively beginner-based question. that's okay. Just send me a personal message, guys. I'm not going to not answer you. Okay. I'm here to help as best I can. So feel free to, don't be shy. I'm here to help you guys. I haven't had much coffee this morning. All right. If you guys are good to go, feel free to hop off. Enjoy your weekend. Thank you guys so much. If you have any last minute questions, I'll stay on for another minute. Looking for a really good week ahead. For those of you who are already currently a part of our prop firm automation service and are waiting on trade ideas to begin, we don't have a ton of people with their funded account credentials yet. Since we just started like 1.5, 2 weeks ago, we have a lot of people who are technically funded. They just haven't received their credentials yet because they're still uploading their KYC docs. So they haven't had the firms haven't finalized that process. So I think we have a couple people who actually have their live account credentials, but I just don't want to start the trade idea side of it until more people are actually able to utilize it. So if we don't start it Monday, we'll probably start it midweek, maybe late next week at the latest. 100% we're starting the following week. That's for sure. So just be patient with us. But once we get going, we're going to get going. All right, guys, take care. Have a great rest of your weekend. Thank you guys so much for your time. Hope you learned a lot. If you have any questions, please reach out to me. I'd be happy to help you. I'll just quickly drop in my Telegram username here, just in case you don't have it already. And you guys can message me at any point in time with anything that you need help with. All right, that is up there. And have a good weekend, and we'll talk to you guys later. Take care.